whole, we were estimating a number of around 5,550 crores. The standalone profit has come in at around 390 crores. Now that's missed what we were estimating. We were estimating a number of closer towards 430 crores approximately. And I think we'll get further details in terms of what is the top line. I've got the consolidated numbers, but remember our poll is against the standalone numbers, so they'll be up for you on the screen as well. We have only the net profit that's flashing currently, and that's why the stock has come in for some profit booking. Yep, okay, we've got it. The top line, the total income has come in at 5,681 crores, so that's mildly better than what we were estimating. We were estimating a number of around 5,550 crores approximately, and you just take a look at it, the volume number as well will be quite interesting. I think if you just put the net profit over there, it's at around 600, the EBIT is at around 655 crores. So I think we'll be having a number, we were estimating a number of around 941 crores. I think the margins could be a tad bit better than what we were estimating. Watch out for the volumes as well. If you could just get the volume number up for you on the screen. I think the total volume, yep, the combined cement as well as clinker sales has come in at around 11.5 million tons. I think that will be much better than what the street was estimating. So volumes have done better. The top line is a tad bit better. The margins as well, I think we'll have to wait by for the margins. They should be up for you on the screen as well. Though the profit has taken a bit of a knock, let's just see. The other income has come in lower at around 44 crores. That compares with the reading of around 74 crores. So that's something that you need to contend with. Remember, for this quarter itself, the tax expenses are much higher because the tax paid over here is 175 crores. That compares with the reading of around 95 crores. And you take a look at it, that's on a PBT of 570 versus 505. So the taxation has been a tad bit higher if you compare it with on a year-on-year basis. We'll try to get a reaction as well that's coming in. If we can just get the margin up for you on the screen, it's coming at around 990 crores. I think the operating margin Attica team is telling us. So that's better than what we were estimating. I think we have with us Jaspreet Singh Arora, who joins us to give us a quick reaction. Hi, Jaspreet. What's your reading of the numbers? It appears like it's a top-line beat. Margins as well have come in towards the higher end of what the street was estimating. How are you reading the standalone numbers? Jaspreet?
Yeah.
Jaspreet, what's your reading of the numbers? It appears prima facie that there's a bit of a beat on the top line. It's coming at the higher end, as well as margins have come in at the higher end.
Yeah, that's right. And if I look, do a quick calculation based on the volumes, based on our guesstimate, it's again showing an EBITDA per ton, which is pretty healthy, closer towards in excess of 900 per ton, whereas the consensus was anywhere between 850 or thereabouts. So there seems to be a pretty good set of numbers reading it from on that level.
Okay, Jaspreet, how would you look at the stock here on? Would you look at revising your rating or target on the stock?
No, so our rating is a buy, and with at least a 15% upside from current levels, and that primarily comes from the fact that there's not much options in the large cap category, and clearly Ultratech is clearly inching up towards the 75 million ton or thereabouts category and growing organically and inorganically. So even though valuations might seem to be on a high side, but given the growth that you see in this stock and the consistency in the numbers that it is delivering quarter on quarter, clearly it remains a must buy on any investor list.
All right, Jaspreet, what was your volume numbers that you were estimating? They've given the combined cement and sales numbers. That's coming at around 11.5 million tons. What were you estimating for this quarter itself?
So it was closer to 11 million tons, which is a 5% growth. Yeah, if it's 11.5, yeah, there is a beat to that extent.
Correct, but the numbers that they're comparing it with, 11.5 million tons compares with around 11.17 is what they've said in terms of the combined cement and clinker sales. And also, if you take a look at it, the white cement as well as the wall care putty, that's coming at around 3.2 lakh tons. That compares with around 2.99 lakh tons. Just want to check with you, your versus numbers, if you look at it on a year-on-year basis, are they matching with what you were working with?
Yeah, so I mean, I was broadly looking at a 5% volume growth on an aggregate basis, including clinker and white cement and putty. So
right.
Yeah, that comes to broadly 11.2 million tons. So if it's 11.5, yeah, that's the upside.
All right, Jaspreet, thanks so much for joining in. So, Sumaya, it does appear that on the top line there's a bit of a beat. The volumes as well have come in higher. And even the operating profit, it appears it's quite healthy. As Jaspreet said, the EBITDA per ton at around 900 rupees per ton. That's going to be quite a good reading. In fact, it's the biggest cement manufacturer. Remember, these numbers, they do not include the Madhya Pradesh acquisition. They include the Gujarat, the Gujarat acquisition that they did, the JP Associates Gujarat plant that they did last year. It was part of their last year's numbers as well on a year-on-year basis. But this time, the capacity utilization is likely to come in higher. And that's what's really contributed to the volume front. So that's why the stock has recovered close to 100%.